Thanks a lot for that. Well, let's go across to Mayuresh Joshi, who joins us to help us out with some fundamental analysis. Hi, Mayuresh. Good afternoon. Mayuresh, I want to ask you about the cement space because there were two big brokerage notes that came in earlier today. So I'm going to just run our viewers through that, and then I want to know your view, how you want to approach the space. Now, the two big brokerage notes on cement that came out earlier today, and both of them have contradictory views. Nomura, well, they're positive, while UBS is cautious. Let's start with Nomura first. They believe that we are in a strong near-term up move, and the drivers which outweigh the structural challenges. So they say the positives outweigh the negatives. They have observed that in the past 4 election cycles, the industry records its highest volume growth in the pre-election years. And they have forecasted that cement demand over the next 2 years, that's FY24 to FY26, well, it will grow by around 5%. That compares with around 3.8% that it's grown in the last 10 years or so. They remain positive in the near term due to the moderated input costs, and they're expecting the EBITDA per ton to improve by 30% on a year-on-year basis in the coming fiscal, though they admit there's limited ROCE expansion potential due to the large underutilized asset base and also the flattish cost structure. Their top pick is Dalmia Bharat, as they believe that there is potential to become a pan-India player in the near term, while they have a reduced rating on Shree Cement, as they are losing the cost advantage that they had, and also they're moving away from their core market, which was North India. Now, moving to the cautious view, then UBS, well, they are cautious on the cement space. They have a contrarian negative view. That's because of the rising competition as well as expensive valuations. They say that any sharp uptick in the stock prices is a good opportunity to book some profits. The key reasons that they have highlighted is that demand is likely to slow after the general elections, that's post-2024. Capacity addition is likely to exceed the medium-term demand. They also expect players to resort to pricing to grow or defend their turf. And they also see limited room for value accretive M&A. They're positive though on ACC. They retain a buy call out there. They've tapered down their target price on that one, while on other names they've cut their ratings, and they have a contradictory to Nomura. They have a sell call on Dalmia, which Nomura is most positive on. Mayuresh, what are you making of the cement bag? Two views coming in there. After a while, actually, I have a negative view coming in from a brokerage, from UBS on cement, because everyone's saying cement's going to grow. India needs cement. Whether it's infrastructure, real estate, it's a good way to play. Do you agree, or would you be a little bit cautious after the recent run?
Afternoon, Nigel.